All right, let's get right into it. Today, we're unpacking the Central Bank Act. Now, I know that sounds kind of formal, but this is basically the rule book that governs money and banking for the whole of Trinidad and Tobago. And trust me, it affects every single one of us, every single day.
I mean, really think about it. Who decides what our money looks like, how much of it is out there, or if the bank holding your life savings is actually safe? Well, the answer to all of that is hiding in this one super important piece of legislation.
Okay, so that's a lot of legal speak, right? Let's translate. Monetary credit is just about how easy or hard it is to get a loan. Exchange conditions, that's about the value of our TT dollar compared to other currencies. So what this is really saying is that the central bank has one main job: to keep our economy healthy and stable. It's the playbook for our entire financial system.
So, let's start with the bank's biggest and most fundamental role. You can think of it as the guardian of the country's financial well-being. And that all starts with the actual physical cash we use. This is probably the part of the bank's job you see the most, the notes and coins that we handle all the time. And something we totally take for granted, but the rules behind it are absolutely crucial for our economy to even function.
Now, the key word on this slide is sole. Section 21 of the Act gives the central bank a complete monopoly on creating our official money. No one else can do it. This is really the heart of modern money. Its value comes from the fact that we all trust this one single authority that issues it. Imagine if anyone could print money. It would be total chaos.
And this gets down to what makes money, well, money. Section 26 is super clear here. A note is only legal tender, meaning a business has to accept it if it's in good shape. If it's torn up, written on, or bent, they can actually refuse it. And that's not just about being neat. It's about making sure the currency we all use stays reliable and trustworthy.
Yeah, and the law has serious teeth. As it should. Section 29 lays out these heavy penalties for counterfeiting. For a very simple reason. If fake money gets into the system, people lose faith in the real stuff. It literally destroys the value of everybody's savings. So protecting our currency isn't just about catching criminals, it's a matter of national economic security. Okay, so we've seen how the central bank manages the cash in our wallets, but its job goes way deeper. It also manages the institutions that handle all that cash. In short, it's the banker for all the other banks.
So the bank really wears a few different hats here. It sets the big interest rates that influence your car loan or mortgage, and makes sure banks can pay each other smoothly. But most importantly, it's a supervisor. You can think of it like the coach of a national sports team, making sure all the players, the banks, are playing by the rules and are financially fit, so the public doesn't get hurt.
But what happens when a player gets into real trouble? When things go wrong? Well, this is when the central bank puts on a totally different hat and becomes the financial system's chief firefighter.
This is the question that keeps people up at night, right? It's the nightmare scenario for any economy. And you know what? The Central Bank Act has a clear, powerful plan for exactly this situation.
Under its emergency powers in Section 44D, the bank doesn't just sit and watch. It can jump in, investigate what's going on, and if it has to, it can literally take complete control of a failing bank. The number one priority is to protect depositors' money and stop one bank's failure from spreading and causing a total system collapse. It's a massive power, designed to stop a financial panic dead in its tracks.
And this right here, this is the ultimate safety net for you and me. Section 44K of the Act created the Deposit Insurance Fund, and here's the key part. Every single licensed bank must pay into this fund. It's basically a collective insurance policy for the entire banking system, funded by the banks themselves to protect their customers.
And if you're a depositor, this is the number you need to remember: $125,000. Under Section 44N, if your bank were to fail, your savings are insured by that fund up to that amount. This isn't just some random number. It's designed to fully protect the savings of the vast majority of people. And that guarantee is the bedrock of public confidence in our banks. So, we've gone through all the different sections and powers. Let's pull it all together. Why does this institution, governed by this formal-sounding act, actually matter in our day-to-day lives?
Well, it's the guardian that makes sure the cash in your pocket is real and trusted. It's the supervisor working behind the scenes to keep your bank safe. It's the government's partner, helping to keep the whole economy stable. And when things get scary, it's the emergency responder and the provider of that crucial $125,000 safety net for your hard-earned savings.
So, from the cash we hold to the crises we avoid, the Central Bank Act has been our financial bedrock for a long time. But let's be real.
The world of money is changing, and it's changing fast. It's going digital. It's going global. So the big question for the future is, how does this institution, our guardian, evolve to protect us in a whole new financial era?